Welcome to the FI Newscast. I'm Susan Choi. Despite things like continuing supply chain issues, rising costs, and an ever-increasing anxiety about the economy, food and beverage companies still want to see growth both inside and out. But how do we achieve that? This is what we will cover with our guest, Kristen Walters, partner at Mazars in the US, a leading tax, audit, and advisory firm. But first, let's cover the top stories from this week. A new crop of earnings reports are in, and Yum Brands has reason to smile after posting double-digit sales growth for the fifth quarter in a row. The company credited its success to, quote, the twin growth engines that are KFC International and Taco Bell US. Both brands produced double-digit profits in their third quarter. 𝗂𝗏 is also enjoying positive results. Third quarter sales were up 14% and revenues increased by nearly 50%. The fast casual chain just went public earlier this year, but Restaurant Brands International fell below analyst estimates for its most recent quarter. The company said that weaker household budgets are making customers cut back on dining out. And over in food service, Performance Food Group is already starting their fiscal year 2024 with strong first quarter results. Net sales increased around 2%, while case volume grew by around 3%. Research firm 𝗟𝗏𝘁'𝗀 has a new round of data to share on food and beverage in 2024, and the outlook is hopeful. After 3 straight years of volumes drops, the industry should experience modest growth next year as inflation eases up and companies go big on promotions. In particular, the deli sector should be seeing strong sales, especially when it comes to grab-and-go foods. And in the beverage aisle, we should expect to see continued demand for protein and energy drinks, as well as new product offerings. Over in restaurants, restaurant owners are continuing to do what they can to stay afloat. According to an annual survey by Toast Inc. to nearly 1,000 businesses, 42% said they raised menu prices as a result of inflation, an increase from 36% the year before. The rising cost of food is hitting consumers and service providers alike. According to the Bureau of Labor Statistics, the current producer price index for all foods is more than 20% higher than pre-pandemic numbers. Restaurant industry insiders remain optimistic, however, as 29% of those surveyed said they hope to open new locations of their restaurants next year. Some alarming news over in the dairy sector as milk suppliers are working to address a carton shortage. In a recent memo, the U.S. Department of Agriculture's Food and Nutrition Service stated that some schools were having trouble getting their milk inventory, allegedly due to a paper packaging issue with a certain supplier. It started happening in the East Coast, but the shortage is spreading across the U.S. So far, it's not clear what is causing the problem, but this concern applies only to anyone relying on paper cartons, not plastic packaging. Other packaging companies have since started to step up manufacturing to help aid the shortage. And finally, over in retail, consumers are grappling with the idea of shrinkflation. That's when companies start making their products in a volume that's smaller than what they normally produce. The Canadian Broadcasting Corporation did a recent investigation and found that several major U.S. brands have recently reduced the size of their goods, from cake mixes to wheat crackers. Currently, the U.S. does not require companies to list any volume changes in their products. But what do you think? Should that change? Let us know by leaving us a comment. And those are your top stories. Moving into our next segment, how companies can accelerate sales growth in the food and beverage industry. Every company wants to see big sales numbers, but as we will see, food and bev businesses want to see it happening now more than ever. But industry challenges still remain. So what can leaders do to face those obstacles and reach success? To help us dive into this, we have our very special guest, Kristen Walters, partner at Mazars in the US. All right, Kristen, welcome to the show. Thanks for joining us.
Thank you so much for having me again. It's great to be here.
Yeah, we love to have you. We love to have you back here. Food Institute loves Mazars, and thank you also for being a sponsor to this newscast. Okay, let's get into it. How companies can accelerate growth. I think any company, regardless even of whether or not they're in the food and beverage industry, would want to hear this. I know that you all had recently conducted a food and beverage industry outlook survey. You asked questions of multiple industry leaders and decision makers, all within the food and beverage category, found some pretty interesting things. I thought, first up, let's take a look at some of these numbers. Now, at the bottom there, you see in 2023. Okay, so the graph here, factors influencing sales growth, year-over-year comparison over the previous few years here. That bottom line right there, no growth expected. With every passing year, it decreases. And you see it's around, I would say, maybe the 10% mark of companies that you surveyed expecting no growth. So that means a lot of companies are expecting growth in the future. What is your take on this? Explain to us about these percentages. Where are companies at? Give us your insights, Kristen.
Sure. So, 90% of companies expecting sales growth is just such a great statistic for the industry as a whole. And I think what is even more exciting is that about 30% of those who responded with those expectations actually expect growth to be greater than 20%. So, in that table that you had up on the screen before, the top 4 factors that they expect to drive that growth are new customers, new products, new channels of business, and just overall improved sales performance. And all these are pretty heavily rated, 50% or so in responses. So those are really the 4 key areas that I think are driving that growth there.
How can companies achieve those types of goals without losing core competency? What are your thoughts there?
Yeah, so I think organizations within the 0 to 20% sales growth expectations may be able to manage that growth pretty easily. The last few years, they've had to juggle some really significant issues, to name a few, without having to go into too much detail, as we all know what they are. COVID, supply chain risk, rising costs, and workforce issues. Many of these have stabilized somewhat, and I think a lot of organizations have had an overall shift where they're in a much better place, with accommodating change and challenges while still running the business. And they probably are in a better place to take on that type of growth because they've seen growth over the last few years anyway. The organizations that are expecting growth in excess of 20% will have some much bigger challenges if they haven't already been investing in the right places within the organization. If you're juggling significant growth in new customers, and then you're introducing new products, and then also maintaining and growing existing customer bases, you need to have the right infrastructure in place surrounding the process and the technology, as well as the right talent available. So they may have difficulties managing the profitability as well as if they don't have those tools in place. So that's really going to be one of their bigger, broad challenges that they're going to have to face, and it touches all those categories. So organizations that are expecting to introduce new products will definitely have some challenges, but I don't think that's unusual for the space, given how competitive it is. I think we'll see more focus for organizations on this in particular, as it probably fell down the list when trying to manage some of the existing products and supply chain issues that were happening. There were a lot of ingredient changes and ingredient availability and issues that were being dealt with. So I think we'll start to see a real focused effort on that. And in the survey, respondents also indicated that about 59% expected an increased investment in product innovation. So, and that was really in response to the current economic climate and their expectations for being able to run their business. So that's definitely a big strategic effort for organizations. We've also been seeing M&A activity where organizations are trying to enter, the new business channels. Maybe it's something they don't have expertise in, and they're looking to get into that area, and making a concerted effort to find the right organization that fits their brand and strategy. Or it might just be, expanding into a new region. So we're seeing a little bit more focused targets than maybe we have in the past, and maybe a little bit more opportunistic in the past.
Yeah, Kristen, thank you for mentioning M&A. That dovetails right into my next question. You are seeing a lot of this merger and acquisition activity. J.M. Smucker buying out Hostess, with as well as you see various acquisition deals, other acquisition deals of Kevin's, Sovos brands, also the buyout of Subway as well, a Fogo de Chao restaurants. Is that another legit vehicle for accelerating sales growth?
It's definitely a viable option, and we're still seeing quite a bit of activity there as well. I am seeing a lot more of it not come to fruition, at times. So that's been something that has appeared to be, again, a little bit more focused on fitting in with whatever the overall strategy is for the company, right? So I'm in the middle market space. That's where I sit oftentimes. So for those companies, I do see them targeting. I do see companies that are looking to spin off certain parts of their business that maybe aren't with the core business, and maybe was a strategic decision made for just to sustain some of the crazy that was going on in earlier years, something that they jumped into. So I'm seeing just a more focused approach to what the company looks like and what it is, what they want it to look like, right? So that's really what we're seeing. I think it's definitely in play, and it's definitely something that's going to be hot.
So, over at Mazars, where you work, you offer a wide variety of services: audit, advisory, tax, and consulting solutions. Within the food and beverage group, you work with more than 200 leading food and beverage companies in a wide variety of sectors. What have you been seeing and working with your clients currently at the end of 2023? What are you noticing as you're working on various projects?
I'm seeing them a lot more relaxed, in that some of the issues that they've been dealing with are, again, a little bit more stabilized, or maybe they feel like they have better control over them. And again, that points to some of the supply chain and employee turnover and things like that. But I think they have better control over margins and costing. I think that's been a big focus, and they have much better control over that, on how to implement it very quickly, right, if something needs to change. So that's really good. That's a good place to be. But because they're in this place, I'm also seeing that there's a lot more time being spent on strategy and what do we want to be, in 3-5 years. What do we want this organization to be, and how do we get there? And starting to really put together the puzzle pieces on that, and making decisions maybe a little bit differently, and being able to actually focus on the business itself and the core business, and what do they want that to look like. So that's a really good place to be, I think. And again, that speaks to maybe why some of these companies are really now saying that they expect over 20% sales growth. That's a big number, and you have to be focused oftentimes to be able to do that effectively. So I think that we'll see some really good results as we close out this year. We're seeing that with our clients, and hopefully this continues.
And finally, key themes going into 2024. What do you think that companies should be focusing on?
Sure. So, going into 2024, we've been speaking with our clients a lot about digital transformation, and there's still a lot of conversation about ESG. That still continues to be an evolving area for a lot of our client base. So we're really focused in these areas as a firm, because we believe that they're two really significant factors that businesses need to stay focused on to stay relevant and competitive. So for digital transformation, we've built 4 key areas of focus that we're working on with clients, which are ERP modernization, data-driven organizations, safe AI innovation, and then digital business transformation strategies. So we're working with clients in those 4 real areas. It looks different for everyone depending on the type of client, where they are in their business life cycle, and so forth. But those are really the themes around what we're working with our clients on. And then in our sustainability practice, I'd say we're spending a lot of time on, again, just even talking to them about how did they get started? What kind of data do they have? What do they need to really start building some sort of sustainability strategy, some sort of sustainability reporting? And a lot of that starts with who their customers are, because that's what's driving a lot of that for my customer base. A lot of them have a lot of really significant customers who have well-developed sustainability strategies, and they're requiring that their suppliers and their vendors start to provide different information to them and start to have strategies that are similar, and they're evaluating that. So my clients are looking to really be able to give the proper reporting they need to accommodate their customers, but then also understand, how does this help my business? How does this help my brand? And how does this help? And what other ways can it help? So that's really where we're spending a lot of time.
helping to handle AI technology, helping to deal with sustainability, trying to achieve those new customers, new products, new channels, all pointing the way towards accelerated growth for companies. Kristen Walters, a partner at Mazars in the US. Kristen, thanks again for joining us.
I appreciate you having me. Thanks so much. This is a lot of fun.
Before we go, we're going to take a look at what's coming up in the food industry in the coming days. On November 14th, the Bureau of Labor Statistics releases an updated consumer price index. On the same day, real earnings numbers come out as well. On November 15th, the BLS gives out the latest on the producer price index. And also on the 15th, the Census Bureau unveils monthly retail sales for September of 2023.
When it comes to your business, there are infinite possibilities for the future. So how do you determine the right way forward? At Mazars, we'll do whatever it takes to help you forge that path with confidence. Mazars is an independent audit, tax, advisory, and consulting firm with local roots and international scale. Beyond providing technical expertise and the highest quality performance, our teams are deeply committed to collaborating with your business. When you're ready for what's next, move forward with Mazars.
And don't forget, you can check out all the great content that we've done by clicking on this playlist. Till next time, I'm Susan Choi for the Food Institute. Special thanks to our sponsor, Mazars.